As we enter Q4 of 2025, the crypto market is larger than it's ever been before, with Bitcoin just recently hitting a new all-time high of $126,000. In the process of actually getting here, however, sentiment and ways to actually make money in crypto have changed drastically. The plays and styles that have allowed people to make millions of dollars in even just the past year don't work the same anymore. I'm Alex. I've made millions of dollars in this bull cycle so far, exposed myself to every existing corner of crypto, and traded alongside 7- and 8-figure players, some of whom are the biggest names in the space. And if you are trying to find out where the real opportunity is going in Q4 2025, I'm going to be ranking and breaking down every meaningful way to make money in crypto right now. This breakdown might save months of wasted time and maybe paint a clearer picture of where you are right now and where you're headed to. So without further ado, let's get into it. This is not financial advice. I am not a financial advisor. These are just my personal opinions on the market. So first on the tier list, we got trading futures. Now this is going to go in A tier. And before I even break down why I believe trading futures in A, I am a strong believer in that TA is a skill that everyone should have at least a basic understanding of, right? Just keeping key levels of higher time frame macro in mind, no matter what kind of sector of crypto you're trading. I think it's just going to help you a lot when it comes to extra confluence and just situational awareness on maybe something like what could possibly be a good time to be more risk on or risk off right now. So one good way to look at this is by looking at crypto as an ocean, right? The actual ocean itself is Bitcoin, the largest cryptocurrency. And when an ocean rises or it goes down, it brings everything up or down with it. So when Bitcoin is up, the market is generally going to be a lot hotter. And when Bitcoin is down, there's usually going to be less liquidity in the market. Now, I'm not saying this like it's an objective statement, right? I'm just giving you an example of how you can use it as sort of an extra perspective when you're trading. So maybe another example with that would be, let's say 109K was a very key support level. So here is where a lot of the market bottomed out. Now you can say, okay, if Bitcoin is at a key support level right here, and I think it's going to bounce, maybe I should keep holding onto my coins, which I believe will outperform Bitcoin on this bounce. So that's really an example of how you can just use a basic understanding of macro to help with your trading, right? And to accompany that, I am also a big believer that the chart and price will tell you pretty much everything you need to know, and that most of the time, any event or news is going to instantly reflect on the charts if you look at a high enough of a time frame. Of course, this doesn't include any black swan or catastrophic events, but only when it comes to larger coins like majors or altcoins with enough liquidity and price history. Let me say this again, you cannot do TA on shit coins or meme coins if that's what you're trading, which are usually going to be in price discovery, right? Price data needs to be accounted for. I see a lot of people doing TA on new coins that have been around for like a day, and maybe they're sitting at a couple $100K or $1 million market cap. It's not going to work, right? Because there just straight up isn't enough price data. And I'm looking at some coins on chain for Solana or BNB. TA on these is not going to work, right? These coins are way too new. They're at way too low of a market cap. They just don't have enough liquidity. You can draw all the lines you want on these coins. It doesn't matter. These are going to rely on the coin's actual narrative. So they're going to be in price discovery for most of the time, only up or only down. So what makes trading futures so great? Why does it deserve this A tier placement? So just a surface level breakdown of its benefits. The great thing about perps is that there's going to be constant opportunity in it, enough so that it makes it worth specializing in. What do I mean by this? And I'm being really broad here and talking about trading crypto futures in more of a comparative perspective compared to doing anything else in the sector of crypto. So just keep that in mind. So for example, let's say you're looking at the perspective of an on-chain trader. So I head to the pull section. I'm just sitting here looking for new pairs, or I may be just sitting comfortable in my bags. And during this time, either whatever I'm sitting on isn't really doing anything special, I just have to keep patient, or trading new pairs and trenching is just straight up dead. Honestly, like it is now for a lot of the market. You can't really do anything but just sit out. There's no other way to really capitalize, right? If ceilings are low, sentiment is bad, you really can't do anything. Now, if you're trading futures on the other hand, you can open an established cryptocurrency that is always going to have some price action going on. And instead, you might be doing really well in this environment by simply just playing the chart. And if you have a setup that comes up with this price action, whatever you trade, break of structure, ICT, my point is you can still be making money in this kind of market. For example, at this key level of Bitcoin that I was just talking about, and the entire market on chain was dead, there was not really many plays you could have capitalized on at this time. Me and my friends were talking about and gave our entire thesis in my inner circle. If you want to literally just pause right here and take a quick read on why we believe that there was huge risk to reward of longing at this level. And we ended up catching one of the most generational moves of this cycle, and also spoke our thoughts. And remember what I said, crypto is an ocean, right? On why we believe that buying established coins at this level that moved with the market and outperformed it in the past was also a play with great risk to reward. So I believe that trading futures, and TA is an extremely valuable skill set to learn, and you can also apply it outside of crypto into other more volatile markets, equities, forex, whatever. But a common problem with trading futures that I do see a lot, and you probably see a lot, is when you give crypto degenerates the power of leverage. And most people, even crypto participants who are extremely profitable at something like on-chain trading, and they switch over to perps because there's way higher of a ceiling on how much money you can make with this false sense of confidence or lack of risk management. And you hear the same story so many times of people just blowing up $1 million portfolios or just straight up losing everything. Rectober, if you know who this is in crypto Twitter, he's made millions of dollars trading crypto on chain. So clearly he's a great on-chain trader. He switches over to perps, and in a single trade, he's down $1.25 million. Boom, his entire portfolio is gone from a single short trade. And this is truly the only market where you can genuinely just lose everything, no matter how much capital you're playing with. And I'm not speaking out of my ass here or just reflecting what I've seen from Twitter posts like this. The most recent drawdown we saw in Bitcoin, this very move that I'm referring to, this 10% move, remember, keep this in mind, only a 10% move down was responsible for the world's largest long liquidation event since February. These crypto degenerates are your fellow market participants and should teach you a lesson about the risk that comes with trading futures. And compare that to something like on-chain trading, for example, where you straight up just can't lose that massive amount of money in one go. In most coins, straight up because of liquidity restrictions and price impact, right? You cannot lose $1 million from a coin with $1 million market cap, right? It's still an extremely difficult market like every other zero-sum market out there, but it's way harder to go to absolute zero unless you're doing something truly reckless. With perps, your couple $100,000 account, your $1 million account can literally evaporate in a single trade. So once again, really generalized here, what should I watch out for? False confidence and a massive risk profile, no matter how much capital you're playing with. But you are still working with a much more consistent opportunity compared to other sectors in crypto. And once again, you do have a limitless ceiling, right? The coins you're actually going to be trading futures on are going to have much more liquidity than whatever meme coin, utility coin, shit coin you're going to be seeing on chain or in the trenches. But with all that opportunity, why not higher? Why is trading futures just an A? So the only reason I'm putting futures and learning TA here and not higher is simply because I think for most people, you just objectively need to invest a lot more time and actually learn more on the technical side to even pick up this skill set to begin with, right? Compared to something like trading on chain, which is equally difficult to learn, but I feel it just has a much lower barrier to entry, right? If you're trying to learn TA, you're sitting from scratch with zero fundamentals, nothing whatsoever. You're going to be sitting there watching countless videos before you can even backtest or apply any of the strategies and setups you're trying to think of. And I just feel like that barrier alone is going to off-put a lot of people, which is a reason why you just see a lot more people trading on chain in crypto than actually trading perps. And number two, you just straight up need to have a larger amount of starting capital, especially if you're focusing on something like higher time frame swings, right? I just pulled up the weekly chart on Bitcoin, where catching an entire move like the one we just had could give you, let's say, a 2x or 3x at most. Once again, being really general here, that's huge for someone who's doing it on like $1 million, but if you're only trading with like $1,000 or two, it just doesn't really seem too much. Yes, it builds over time. Yes, that kind of view is going to be subjective, but I just think compared to something like trading on chain, for example, where the volatility in it is just going to create a bigger window for opportunity, you're objectively going to have a harder time multiplying a smaller portfolio. And you'll see in the rest of the video that that's a concept that's going to apply to literally every single sector of crypto, but I think it's really emphasized in trading futures. But all in all, really solid opportunity in learning this skill set. I think it still deserves its A tier. Next, we've got farming airdrops. Now, this is going to go in C tier. So why is farming airdrops in C tier? If you're newer, airdrops are basically free token distributions, right? So you get free coins that projects give out to early users as a reward for interacting with their platform. Pretty simple idea. You use their protocol or platform, or you stake your liquidity just so that the platform can show, okay, we can actually keep funds safe on it. When the platform actually launches an official coin centered around their very platform, you get a piece of it. So it's meant to reward early adopters and just keep in the attention, right? So it all sounds good, right? On the surface, it just looks like free money that's just handed to you. Unfortunately, airdrops are a thing of old. I think with the stage we're in right now, a lot of the opportunity in airdrops has kind of washed away. You know, back in like 2020, 2022, you could pretty much just participate on airdrops like Blur, Arbitrum, Uniswap, and walk away with 5 or 6 figures in your pocket, which is genuinely crazy to think about. But that kind of mania is gone, right? We did have some pretty big ones, like Hyperliquid was a big one where they pretty much just gave you points for doing perps on their platform. Tensor was also a very big one too, if you were around for this. These were 2 examples of extremely generous airdrops, but with that in mind, 2 things really hold this sector back. So number 1, one, actual generous, profitable ones, like the ones I just showed you, are infrequent. I can count the actual generous airdrops that occurred this year on my hand, and triple that amount of platforms that actually did promise an airdrop to their users, but either never followed through, like Photon or BullX, or they're just straight up disappointing, like Magic Eden, which didn't even give that much per point, and the chart went only down after their token launch. And number two, large capital and time investment. You now need an extremely large amount of initial capital to farm an airdrop in the first place. The whole idea is bringing attention into a product mainly through volume or just locking it through staking. So you need to bring in a sizable amount of capital and lock it up in some way or another, whether you're actually trading on the platform or you're just staking it, for it to be worth your time. And if you are in a position where locking up that much liquidity is actually going to restrict you from taking other moves like trading on chain or trading futures, it's just not worth it in a bull market where there are so many better plays with better risk to reward. And for the volume based ones, right, where you're just trading on the actual platform itself to get points, most of the time you need to actually farm points. Keep that scenario in mind. You are farming points by trading on the platform. So I literally just showed you Hyperliquid. This was for trading perps, so you have to actually go on their site for Hyperliquid, start trading, and trade perps. You're here just doing what you always do, trading perps. And for Tensor, you were trading NFTs. So you are trading by default and therefore need to learn the actual skill itself as well, so you don't lose a significant amount of money while you are farming the very airdrop. So all this time and effort into something you don't really know will pay out well or even at all. And yeah, of course, in a volatile market like crypto, that is the price you pay for asymmetrical upside, right? It's not going to be all winners, right? There has to be some kind of loser in the market for that asymmetrical upside to exist. But it's different in a scenario where large airdrops, profitable airdrops, just don't even occur frequently. So you kind of need them to play out if you're truly investing a lot of your time and your capital into them. But with that being said, the reason they're not any lower is because there is still that window of huge opportunity in farming them. And because of that, I still do research on any that might seem worthwhile. And I am currently looking into one at the moment actually, but that's just a little side note. All in all, airdrops aren't dead, but they're no longer the really easy money that they once were last cycle. And for a lot of people, they're inconsistent. They require more capital than you think. They just generally have a very poor risk to reward compared to a lot of the other ways to make money in crypto right now. And that's why I keep them in C tier. Worth paying attention to, but not really something I build my whole strategy around anymore. Next, we've got trading NFTs. So this is a picture of a very special Bored Ape Yacht Club NFT. It was worth an extremely large amount of money back in the day. And guess what it's at now? Zero. NFTs, D tier. I don't think I need to explain any further. It's a completely dead market. They already had their spotlight last cycle. Not even worth your time. I didn't even make a slide for it. D tier. If you're still trading NFTs in the big 2025, what are you doing? So next we've got trading on chain. So this could be meme coins, utility coins. You're trading coins on popular chains like Solana, Ethereum, BNB, whatever chain is hot at the moment. This is going in S. And the reasoning is pretty simple. It's not just about how much money is in trading this market or the opportunity of multiple 10, 50, 100x plays that happen every single day, which is a big part, but it's also for the simple fact that having a base fundamental of knowing how to trade coins is pretty much necessary if you want to do anything in crypto, not just trading coins. You want to build a product around crypto, you better at least know the market you're catering to and which products built in the past were successful or failed and why. You want to see how a larger coin is doing in crypto, you better know how to do research and read sentiment on it. So back to actually trading on chain. There's no other market in the world that really gives you the opportunity to start from nothing and have the chance of quote unquote making it. However, I mean, Trump coin, if you're around for this, was the biggest modern wealth creation event we've ever seen. We had literal teenagers, not just traders like me. I have friends who just play Fortnite all day, made hundreds of thousands to millions of dollars in front of their computers in a matter of a day. We have never seen a large amount of those instances happening ever in modern history. However, with this opportunity, I do want to point out that there are ways that this process can be easier on you or they can be harder on you. Profitability is going to come down to different styles and how well you are able to adapt. So for example, right now, the concept of just trading new pairs with a small portfolio, so just sitting here, trenching all day and hitting huge multiples is always going to be difficult, right? But I'd say it's even more difficult now than it was before. There is a reason why I have so many live trading videos on my channel, on my Instagram, on my other socials, where I am making tens of thousands of dollars in just a couple couple of minutes to a couple of seconds. The frequency of those opportunities is not the same as it was in the past. There is a reason that I do not frequently upload content like that anymore. Look at all the recent massive plays that we've had so far. Cards, Aster, coins with extremely obvious narratives that gave the window for an easy 5 to 10x, which is obviously going to be huge for someone who has the liquidity to capitalize on that multiple. Just one obvious trade now and then and just sit back comfortably, right? That is what the market is currently favoring. Sitting on your hands, waiting for more established, more obvious plays to come up, rather than just sitting here in front of your terminal, waiting on your ass, clicking the screen 100 times, trying to scalp like maybe a 1.5 or 2x. We're just flipping these huge $0 to $1 million market cap coins over and over and over. That opportunity is not the same. You cannot do that as consistently as you could in the past. Yes, there are windows like right now, the time of recording this. BNB is super hot when it comes to new pairs right now. I have made a shit ton of money from BNB new pairs, but only from today and yesterday. I did not put a single finger to trading new pairs the day before that or the day before that, because the volume in the trenches is now coming in waves where it is going to be extremely hot, extremely easy market conditions for maybe like 1 or 2 days, and then you just sit back when it gets oversaturated. So my point in all this is that with trading on chain, same thing with perps. You need to know when to act, how to act, and when to sit out. That is extremely important. No opportunity in crypto is constant. So this insane opportunity, you just need to be a little bit more careful and know what the market currently favors. Also, something a lot of people don't really talk about is the social aspect of growing as a trader. I'm not gonna lie, some of my money has been made from insider information, as much as I don't want to admit that, right? But how do you actually get into these circles that provide this insider information? So the most general way is you get really good at finding profitable coins on chain. So you're just someone who sits here, you're really good at valuing the narratives behind these coins. And this can apply to perps too, obviously, just giving really good call outs. But once again, I feel like that's a skill that's much harder to learn, and you just don't see a lot of people come up in this way. Back to what I was saying. So you get really good at finding these coins, and then you provide value into whatever community that you were a part of, right? Or you let it be known socially through your X, your Discord, by sharing whatever coin that you found early and your thesis on why it would go up, and then the coin eventually goes up. You and whoever you shared it to are up a shit ton, right? And because you provided value to other people, you are then invited into more private communities who do exactly this entire process I just explained. So just providing constant value to each other. So that way, you guys both win. So being great at trading on chain is one of the best ways you could call it climbing up that social ladder. And as a result, the rewards of trading on chain are going to be exponential in literally every single area. You have the volatile asymmetrical upside that you can work with even if you have a smaller portfolio. And it's a great way to really get your name out there and get physical, tangible benefits as a result of that. But remember, at the end of the day, it's like any other skill set. You still need to actually apply yourself. You need to know how to actually navigate the market, and that is going to take a lot of time and effort. But for the purpose of this video, in my opinion, on-chain trading is S without a doubt. So next we've got creating and developing coins. So creating these very on-chain coins and then launching them so other traders can pump up your bag, which you're probably going to have a lot of supply of. Not something I do and not something I will ever do, but from your perspective, where do I think it belongs? A tier. So why is launching coins in A tier? Because that whole explanation I gave you sounds great, right? Sounds like you don't need to go through the trouble of learning how to trade, and you can just create coins for other people to pump your bags. But while it's true, there is that massive asymmetrical upside in launching coins the same way there is in actually trading them. Obviously, if you launch a coin, you're probably gonna have the best entry from zero. There is a hidden, extremely high barrier of entry compared to every other method that I just talked about. So number one, launching coins is an extremely competitive market. BNB is really hot right now, so let's look at GMGN or even Solana and Axiom, right? Both these terminals, very common terminals to trade new pairs on. Look at how many new coins are spawning every single second. Just pure numbers alone. You are competing with tens of coins being spawned every single second. And out of every single coin you see here that's being spawned, you need people to pick your coin specifically. What are the conditions for that? I'll talk about them. But number two, beyond that competitiveness, you also need a large amount of starting capital. So what people normally do when they launch their own coin, they'll launch the coin and they'll buy up a lot of the initial supply right after launching it. So literally, I'm gonna look for a random new coin here that's gonna spawn with a little bit higher of an initial market cap. So right here, right, instantly spawns at 20K that you just saw. Just to talk about this as an example, why do you think it spawned at 20K initially? Because the person launching this coin wants as much of that cheap initial supply of the coin as possible, so they have more of their own coin to sell in the case that it goes higher. To pump a coin to a $20,000 market cap alone, you need thousands of dollars to do that. So for every single coin you launch, you are risking your own money, because if it doesn't work out, if no one buys the coin, you need to sell on yourself. You're going to lose money to price impact because of lack of liquidity. You are going to lose money in the case that any bot or anyone is able to front run your buys. So this process, like every single thing in crypto, isn't free. Now, with those statistical barriers out the way, you also need knowledge of how to trade on chain. So you need to have this skill set before you can even launch a coin. Why is that? So I was literally talking about how you need your coin to stand out among a sea of tens, hundreds of thousands being spawned a day. How do you do that? By creating a coin that's going to compel other traders to buy. You need to know what these traders are looking for. And the only way you can do that is if you can think like an on-chain trader. So knowing how to trade on-chain is a requirement, or you are just going to end up burning away your money. And once you do have that knowledge of how to trade on-chain, of course, it's still not going to be perfect. No one's going to be perfect. Obviously, you're still going to be burning away money, but more importantly, time. If you are waiting that entire time trying to manage your coin, trying to see when it goes up, and then knowing when you have to ditch it when it doesn't work, you will miss out on opportunities doing that entire process, that entire setup that you would actually be able to capitalize on if you were trading on chain. So I believe that yes, there is opportunity. Of course, if your coin takes off, you have a shit ton of supply of it, you are going to make a lot of money. There is a lot of opportunity in launching coins. I just think your time is way better spent actually trading on chain. And a huge reason for that is the fourth point. For it to be actually worth your time, you need some kind of social proof or community with an audience that are willing to put their money on the line just to buy into your coin. So everything I said about knowing how to trade on chain, I literally just talked about how you can climb up that hypothetical social ladder in crypto with this skill. You need to multiply it by times 10. You need to be providing so much value that you actually get an audience that will listen blindly to whatever you're talking about. So you need all of that built up already, because then obviously if you have a huge audience who will listen to you, you post about a coin that you created, they're gonna buy it. Right? Now, what is the problem with that? Launching coins will be damaging to your reputation. Even if it does well at the beginning, in crypto, everything will go down eventually. If you associate yourself with launching a coin and it goes down, which it inevitably will at the end, how do you think your audience is going to react to you just blindly pushing that coin over and over and over again, just blindly bull posting it? When it crashes down to zero, you are going to lose all this time and effort towards building your social profile, to providing value to other people. If you were just blindly bull posting your own coin, you are going to lose your authority. And sure, you might have a lot of money temporarily, short term, but your damaged reputation is going to be around for a lot longer. You're going to be restricted from certain circles. You're going to have a harder time building an audience. It's just not worth it. But it is an A tier for a reason. Like I said, there is opportunity. And on the flip side of what I was literally just talking about, the social benefit of a successful launch can be massive temporarily. Like I said, if the coin goes up initially, it's just running up only to millions. People are going to be happy in the moment. You just made your audience a shit ton of money. It's going to require an audience that is going to blindly listen to you, and it will damage you in the end. So all in all, launching coins, A tier, no higher or lower for the reasons I literally just explained. Next, we've got holding majors. So not really much to explain. You're buying coins with already very high market caps like Bitcoin and Ethereum, and you're just sitting comfortable in spot. Going to go in B tier, simply just for the fact that this is really only something you can do with an extremely large amount of capital. Obviously, going to be much quote unquote safer, more hands-off, and you're really just betting on the entire crypto ecosystem as a whole. But if you're someone with, let's say, a couple thousand or a couple 10,000, a 5% or 10% move in something like Bitcoin isn't going to affect you much, right? Bitcoin's already at 122K at the time of recording this. Now, that same move on someone or an institution who has millions invested, on the other hand, it's going to be a completely different story. So the key concept here is risk to reward. And the risk to reward of specializing in this is going to be low. Let's say, just for the sake of this hypothetical, 5 to 10% move over a higher time frame. However you come up to that conclusion, you are going to end up locking a significant amount of capital to make your trade worth it for whenever that thesis plays out. And I literally just explained the cons of locking up your capital in something like a bull market, right? Your thesis is going to sound a little better if you're doing something on the side outside of crypto, but if you're doing this full time, those tens of thousands of dollars you're putting into this trade are locked up. You are waiting for a high time frame thesis to play out. And in this space like crypto, because of liquidity flow and narrative rotation, opportunity is always going to be limited and ever changing. I literally just talked about on-chain trading where all these opportunities are going to come in waves and periods, right? You can't chase or be early to these trends or capitalize on these smaller market cap asymmetric plays if your capital is tied up into a major or an alt for a 10%, 20% move. And sure, you could say it's quote unquote safer, right? But safety in crypto is usually going to come at the cost of growth. And let's say worst case scenario, you're wrong, right? You just paid a massive potential opportunity cost. And remember, I talked about crypto as an ocean, right? Everything established is generally going to move together. A rising tide is going to lift all boats, and a rising tide is going to sink all boats. Everything in crypto that's at least somewhat established will go up and down with the market. It's just a matter of specializing and finding a few group of plays which you've researched extensively that will outperform the rest of the market during periods where it goes up. So if you're just sitting in pure spot, right, you are going to be at the very bottom of that spectrum. You are probably going to lose the least when the market goes down, unless a black swan event happens, but you are also going to gain the least when the market goes up. That being said, I'm not putting it any lower than B because holding majors does have a place, right? If you're managing a larger portfolio or if you're busy with things outside of crypto, this can be a lower effort way to stay exposed to the potential upside of the entire ecosystem, right? But if you're actively in the trenches, you're building a product or you're trading full time, you're probably better off rotating into opportunities where your money can move faster than coins that are already at an extremely high market cap during this limited time in the bull run. Remember, Bitcoin is already at 122K at the time of recording. Solana is already at $228 right now at the time of recording. This is honestly something I list higher during bear markets, where then you do have that opportunity of asymmetric upside. Next, we've got building crypto products. S, on top of on-chain trading. You want to know the real winners of the bull run? It's not the traders who've made millions by completely dedicating themselves to the skill. It's the people who've built the platforms and tools that these very traders use. It's the literal concept of selling shovels in a gold rush. So to really highlight what I'm talking about, let's look at one specific niche. So trading Solana on-chain. Out of all of the possible sectors in crypto, the leading platform for that right now, the leading trading terminal that people use is Axiom Pro. And look at how much revenue they have brought in. $448.71 million in fees, and they haven't even been around for a year. This is one singular niche in crypto, and look at how much they've pulled in. Now, obviously, I can talk about the leader in a niche, but let's look at some of the smaller ones. Shuriken, random trading bot. They're not currently active, but they were active from 2024 to 2025, and you would not see a single person in mainstream, in CT, using this trading bot. It doesn't matter. They pulled in $6.57 million in cumulative fees. If you know what Shuriken is, even back then, it was just a regular Telegram trading bot with pretty much no special features. It beat none of its competitors. They pulled $6.57 million in fees regardless. I can go over the list of cryptocurrencies, obviously very general in terms of products, but these are all something someone or some team built. I can go on and on and on. At the very end of the list, pick out some random coiner protocol, Palu. They're currently at a $61.5 million market cap with $11.6 million in volume in the past 24 hours. You will never see this protocol in your life while trading crypto unless you actually look for it. Regardless, they're at a $61.5 million market cap, and the teams for these larger coins, these larger protocols, usually own at least over 50% of their own coin. That means the team owns over $30 million in assets from this singular protocol alone. Now, don't get me wrong, building in crypto is extremely hard. It's going to have the highest barrier of entry compared to any other sector that you want to make money in. It's kind of comparable to launching a coin, but put to the extreme, right? You need a strong team, knowledge of the market you're selling to, and patience to actually build everything out. But if you've spent time in the market, trading on chain, understanding narratives, watching what users actually want or wish you had during your journey trading, you already have the insights that a lot of builders lack. That is your edge. This is why I'm putting developing and building products in crypto in S tier. It's the ultimate form of asymmetric upside, except in this case, it's not just going to be about profits, but reputation, ownership. You're going to have a business and a background that will help you outside of any single trade. Traders are the expendable soldiers in the trenches, right? They're fighting tooth and nail to earn their stars, stepping on each other in the process, and the builders are the ones organizing the entire war. So there you have it. Every single significant way to make money in crypto, ranked by yours truly. We've got developing crypto products at the very top of S tier. We've got on-chain trading following right after it. Then we've got trading futures, skill of learning TA, followed by actually creating and developing coins, then buying crypto, throwing it in your 401k, buying and holding, not looking back, just holding the majors. Then we've got airdrop farming in C tier, and NFTs, the very bottom. Honestly, I should have made an extra tier just for NFTs. There should be a giant blank space actually between airdrop farming and NFTs. So choose a sector, find your edge, and decide if it's something you want to be specializing in. Now, knowing what path you want to go down is great, but you might get lost along the way. That's why I created the Fortune Inner Circle, an exclusive network with some of the most influential figures in every single background. You'll trade alongside verified 7 and 8 figure crypto traders with backgrounds from both on-chain trading and futures, if that's the path you're trying to pursue. We have students like Bowen, a teenager who went from not knowing a single thing about crypto to recently just hitting his first 6-figure trade and made $106,000 off of a single coin. And Bayside, a 15-year-old who made a couple $1,000s off trading perps and wanted to work on his skills trading on chain. And over the course of 4 months, we've helped him make over $500,000 trading on chain through various 5 and 6-figure plays. You will have connections with some of the most well-known builders in the space, like the team of Axiom, which I was literally just talking about in the tier list. We even have traders who've made a collective 8 figures trading NFTs last cycle, if that's something you want to get into now for some reason. And of course, as the leading circle in crypto, we get frequent whitelists for private airdrops and pre-sales. So if you want to accelerate whatever path you're trying to take in crypto, or you're still confused about your potential and what could possibly be a great fit for you, and receive personal guidance from both myself and other top figures in the space, apply in the description down below. Thanks for watching, and peace.